Okay. Yeah, about education.
Whenever you all are ready, you can tell us about PayPal. I'm Eric.
I'm Ryan. I'm Cole.
Charlie.
And it is PayPal. Just a quick overview. We believe that PayPal is a great investment and it's going to provide adequate returns to the Spellman Fund. We're recommending a buy funded by the shares of Emerson Electric. So the math there is going to be 30 shares of PayPal, which will be funded by the 65 shares of Emerson. Just real quick, PayPal continues to expand into new areas of financial services and financial technology. And PayPal and its companies continue to partner with some of the biggest players in the market today. So a quick example would be Venmo and Amazon. They just made a partnership where it allows you to purchase items on Amazon using your Venmo account. Just continuing here with the overview, like I said before, the recommendation, we're going to recommend to buy 30 shares of PayPal with 65 shares of Emerson Electric. The current price as of this morning at 11:15 a.m. was $187.21, which will give us a target return of 11.87% with a target price of $206.80. Just a quick business overview here again. It allows you to send money, pay online. They have merchant accounts, which is going to be crucial for them going forward. And they've recently dived into the crypto space, allowing you to trade and hold cryptocurrencies on their app. Some of the challenges that they've been facing lately is online purchase fraud, some increasing competition with companies like Apple Pay, Google Pay, WePay, and then entering new markets. They are a global company, and so entering new countries can prove to be a bit of a challenge sometimes. But some of the benefits are they support individuals and businesses alike. So both of their accounts, or both of the types of accounts, are treated with equal weight in the company, and then it does provide efficiency for all of its users, which is very important these days. So the key drivers today that we're going to be going over are transaction fees, their buy now, pay later service, electronic point of sale, and their demographics. And then just a few risks, like I said, online purchase fraud. It is an online company. Purchase fraud and online cybersecurity is kind of a big issue these days. It's not unbeatable, but it can be prevented. And then so another thing is potential use for illegal activity. Some people can sign up for a credit card through PayPal using a fake name, or they can send money to somebody that's not supposed to be sent to, or they can do money laundering activities on PayPal. So that's just kind of a few of the risks that are associated. Here's just some quick statistics. I'm going to get the elephant in the room out of the way right away. The PE ratio is very high. It is a growth stock, so that's kind of, it comes with the territory, but you follow that up with an ROE that's outstanding. They're very well leveraged. They use their equity properly. And then EPS growth from 2018 to 2021, or 2020 rather, has been fantastic. And then you can see here the chart on the left is the stock growth for the past 2 years. They've had a very great and very stable growth over the past years up until about early this summer, where it started to decline just a little bit. And it reached an all-time low. I believe it was last week or the week before at about 175, and now it's kind of working its way back to where it should be. So, a quick outline of what we're going to go over after the business overview here is we'll break down the revenues. It'll be transactional versus all other revenue. We'll go through ESG, go over some financials. Then we'll go through the drivers. The two main ones are the online sales and the buy now, pay later service. The other two, they're kind of secondary, but they're still important to us. We want to mention to you the electronic point of sale transactions and the demographics, and then we'll get into the valuation, some risks, where it fits in the portfolio, and then we'll end with just kind of solidifying our recommendation this summer. So
Taking a look at the business overview of PayPal, right now PayPal has about 403 million active customer merchant accounts, which is exceeding to grow each month. Right now, PayPal has acquired a lot of companies. Right now they own Venmo, Honey, Patty, Simility, which is going to protect them against fraud. They have broken down the revenue in two separate areas. They have transactional revenue, which as you can see on this figure 3 is going to be their main revenue. So that's each transaction. These are the past 3 years. So from 2018 to 2020, they have grown significantly. They also have revenue from other value-added services, which is going to be like their fees. All of their other revenue are like subscriptions, fees, and then as he said earlier, recently they have partnered with Amazon in 2020, which we feel is going to be very beneficial for their revenue in the future. They will be able to use Venmo at checkout. So this is going to be important for the younger demographic, people who are very interested in cryptocurrency. They will now be able to use their crypto through Venmo to check out on their Amazon orders. On this figure 5 here, you can see their transactional revenue split up into 3 parts. You have your active accounts, which is growing each year. You have your number of payment transactions and your TPV, which is going to be the overall value of your money. And then you have your net revenues, which I took it down into quarter 3 of 2020 and 2021. You can see that in 2020, they had about 5.4 billion, and they had about a 13% increase in their net revenues for quarter 3 in 2021 to about 6 billion. So this is just important to see for the future that they are increasing each month.
Now switching over to ESG. Obviously, in the last couple of years, ESG has become very important to stockholders. So it's important that each company addresses it and has a good strategic plan to set forth. Over the last couple of years, PayPal has done a lot of good. The first is that they use their services for a lot of good, especially in the pandemic. During the pandemic, they used their direct deposit feature, and that allowed the customers to get the pandemic check right into the PayPal account. Secondly, they provided a lot of small business loans to help keep them afloat during these tough times. And next, they do a lot of good for the earth in general. They only source their suppliers with those who have the same environmental standards, and that is that they're fighting climate change. They're going towards more of that net zero. As they say, as you can see, they have promised to be net carbon zero by 2040 as well. Some cons though is that they do have sort of a reach of power when it comes to their customers. A lot of times they either just suspend or deactivate accounts without any reasoning. If they feel like they did something wrong, they'll just deactivate their account. They won't explain on it further. And you're starting to see that a little more and more. Social media becomes more known. It's been known in Instagram, TikTok, all that to also kind of do that without no further explanation. And secondly, as Eric mentioned earlier, just cybersecurity. As more things go online, it's inevitable that something will happen. The good thing is that PayPal is doing a lot of good. They're buffing up their servers. They're acquiring these firms for more cybersecurity. So they are trying to fight that as well. Lastly, they have a good plan set forth, and that's why we give them a favorable recommendation when it comes to ESG.
Just a real quick breakdown of their main financials here. Like I said earlier, the PE ratio is high. We're aware of that. We know that it's a growth stock. Like I said, it comes with the territory. But if you kind of take a look at the rest of the chart here, you can see that their financials are quite solid. For example, ROE is outstanding. It beats the industry average tenfold. ROA also is outstanding. Their net profit margins are great, and debt to equity ratio is less than the industry average, which is a good thing. So overall, as a company, they're making the right moves, they're making the right decisions, and they're leveraging themselves perfectly. And so their financial stability is there. If you look at the competitors, Intuit and Square, they're pretty equal in terms of PE ratio. I guess Square is about 4 times the size of the trailing 12-month PE ratio. But it's kind of good to see that PayPal is equal, if not more sound and more stable than their competitors. The industry average is the financial services industry. I want to make that point. It's not fintech, just because we're kind of trying to push this more as a financial services rather than a financial technology firm. But yeah, overall, I think it's important to understand that the financials overall are solid compared to what it may seem from a stock and a market point of view.
Moving on to our first driver is online sales. The main source is through these transaction fees that they get through online sales. Obviously, during the pandemic, the e-commerce community boomed. It's gone up about 25-30% just in the past year alone. So we expect that to keep growing. Obviously, it will regress a little. It can't keep up that growth. But PayPal currently holds an 18% market share in the e-commerce transaction industry as well. So just moving on to some numbers, we're projecting $19.76 billion in transaction revenue through online sales. We picked a growth rate of 12.3%. This is just due to a lot of sources in our own research. Has an e-commerce community growing anywhere from 14 to 17% within the next couple of years. Obviously, we want to be a little safer, so we picked something a little lower just in case the e-commerce community does regress even more than we think it might. And then a profit margin of 19.8% as well, will give us about $3.45 billion in transaction profit. Moving on, in just 2024, we'll see that grow to about 5.51%, pending our projections as well. So a lot of good growth just in that transaction online sales department.
Our second driver is PayPal's Buy Now, Pay Later implementation, and it's PayPal's Pay in 4. They allow customers to split their payments into 4 interest-free payments, and they offer no late fees. PayPal actually commissioned a study conducted by Logica Research that said if split payment option is offered to a consumer, they're 64% more likely to make that purchase. So there's benefits for both customers and merchants and businesses. For customers, it's payment flexibility and the interest-free choice and purchasing power, all with a reputable source and name that they all know and trust, PayPal. And for merchants, you can see they'll get increased sales, no additional cost, easy promotion, and they'll also get reach to next-gen shoppers, which we'll talk more about demographics later in the presentation. Here's some working figures for the Buy Now, Pay Later. We took it as a percentage of the transaction revenue, and then we chose 21% as a growth rate. Because the Buy Now, Pay Later is a super young and growing market industry, it was very hard to pin down a specific number. So we felt that we chose a pretty reliable middle ground at 21% growth. And then we multiplied that by that profit margin. So just from 2021, we're seeing around $821.5 million from this Buy Now, Pay Later service alone. And this is likely to grow to around $1.45 billion by 2024.
So the way we split our presentation up is we have our 2 main drivers that we allocated towards our revenue, and then we have 2 secondary drivers. The first one's going to be our electronic point of sales, and then we're going to talk about the demographics. These are just things we feel are upcoming and going to grow in the future. They're important, but we didn't calculate them as much into our numbers. So for starters, this electronic point of sales, in 2018, they acquired a company called Zettle. So this is a company that had already had 500,000 merchants and operated in 12 countries. So this is a potential growth into new countries and a new industry. This is going to be aimed towards small businesses. It's beneficial because it allows data collection. It can help businesses not only understand their customer needs, but also they can help them manage their staff, easy for shopping and returns. They can also do things like generate real-time inventory. So just fast pace, especially for small businesses. This is going to come in things like tablets, credit card readers, barcode scanners, as you can see here. And it's just going to make it overall very easy for small businesses and customers to shop and return.
Just a real quick touching on the demographics. So peer-to-peer payment platforms such as PayPal, Venmo, Apple Pay, Google Pay, all that saw significant increases in usage over the pandemic, mainly because of the lockdown. So, your purchases were kind of forced to be made online. And, the younger ages, us, 16 to 30, I guess, are focusing on convenience rather than traditional banking. They don't really like going into the bank, talking to the teller. It seems to me that talking to a real person has become kind of a challenge for some going forward. So, yeah, so we just kind of wanted to break down the age of users too after that. You can see it's pretty evenly split, which is great. It's good to know that their main demographic, 25 to 34, is the highest amount of usage at 25%. But it's also interesting to note that ages 55 and up is their second highest users, which is good because it means they're adopting this sort of technology and this way of managing money or using money rather. And it's good to see that 35 to 44 and 45 to 54 are the top 2. This the next highest, which means they can carry that on and continue to use the program as it evolves, and recommend it to their peers and younger individuals alike. 24 and under is the youngest. Which makes sense. 24 and younger is the least amount, which makes sense because a lot of times people under the age of 18 aren't really using a service like PayPal unless it's for something they shouldn't be using it for. So yeah, it's good to see that it's an even breakdown between all of the users across the board. So
now just going on through evaluation, more EPS numbers. Driver 1. So it's important to note that both our drivers do come from transactional revenue. So we split that up even more. So typical online sales, no extra adding, just typically how you buy things, account for about 71% of the total EPS, while driver 2, the Buy Now, Pay Later, that 4 different sections split up payment accounts for 16% of those online sales transactional revenues. And then all other EPS is just under 13% as well. So typically, just moving forward, 2024, we see a lot of growth in the total EPS going about $6.75, which is about 13.5% growth rate through those years. And that's just broken down through a weighted average of the driver one growth rate, 12.3% times 71.2%, and then driver two, 16% times the 21 growth rate, therefore they're on. So that weighted average for EPS came out 13.5% growth rate. And then here's just my further explanation, just to show you guys also, 12.3 was used for driver one, like I explained, 21% for driver two, and then 10% for all other EPS. And then using that 13.5% weighted average by 2024, as we showed earlier, would be $6.75 by 2024. With optimistic growth rate, we did 20%. This is based on two key factors. The first one would be an increase in market share. If PayPal was able to increase their market share, it would do tremendous in both revenue and profit, as the e-commerce community is so big. It's $1 trillion worth of stuff. So even a percentage of increase in market share would do billions of dollars in revenue. And then on the pessimistic side, we use 10%. It still is a growth stock, so we do expect a little above average market. So just to be safe, we did about 10%. And even with the 10%, we do see solid growth, obviously not as well as the baseline and optimistic growth rate, which we do think would happen rather than that pessimistic growth rate.
And this is just a breakdown of our projections. We got all these from the Value Line report that was introduced in November, and we made some corrections just based on current price and growth rate and things like that. So you can see pretty much across the board, it's an increase in all of these statistics here. Just to kind of run through, by 2025, you'll see the free cash flows at $8.731 billion, free cash flow to equity, $7.9 billion. The present values of those two, 5.7 and 5.1 billion. So overall, it's important to know that PayPal is making consistent growth, and it's important to kind of take that into account when you're analyzing the stock and going forward from that. Here we have our 2022 estimates for PE, EPS, and price, as well as the free cash flows. We use the same growth rate for the EPS, so the baseline will be 13.5%. The pessimistic will be 10%, and then the optimistic will be 20%. So just kind of going down the board, we'll have a pessimistic PE of 39.07, an optimistic of 40.76. For EPS, we'll have a pessimistic of 5.07 and an optimistic of 5.39, and then a price estimate. A pessimistic price is 201.98, and an optimistic is 219.71. The free cash flow is same thing, 13.5 is the baseline, 10% is pessimistic, and 20% is optimistic. And you can see the average values here. It'll be 185.63 baseline, 163.10 pessimistic, and 230.72 optimistic. And then for the combined target price, same thing. Baseline is 13.5, pessimistic is 10, optimistic is 20. The current price as of this morning, like we said, was 187.22. So that gives us a baseline of 209.16. The pessimistic is 198.17, and the optimistic will be 221.91 by 2022.
This is a risk matrix that we made for PayPal, and one of the risks we want to talk about right away is COVID-19, especially with the Omicron variant just being released. So it's a very high probability that the risk is going to affect PayPal. However, we didn't put it too high as an impact of risk. Rather, it would be more impactful as a benefit, just because if shops are closing down and e-commerce is booming and online sales, PayPal is going to see a lot of growth from that and positive changes. Some other ones such as system failures, credit risk, and cyber attacks, they're a lot lower probability, but these things do happen. But we put those higher on impact because they have more weight to damage PayPal's reputation and their consumers' confidence. This is our correlation matrix for PayPal. Denoted by the diamonds are the other financial services within the fund. It's also important to note that MasterCard is at a 0.62 correlation coefficient. PayPal actually has an alliance with MasterCard, meaning users can have their MasterCard within their PayPal wallet and make payments through PayPal with it. But also Prudent Financial and JP Morgan, they have a lot lower correlation, which is good to see that diversification. So all in all, we are recommending Emerson Electric Company to be sold because it has 4 stocks with a correlation of above 0.7. We want to sell this to better diversify the portfolio and minimize this risk. The optimal efficient frontier weight for PayPal is 3.37, but because of the high PE to combat it, we also wanted to let you know we're only recommending to buy 30 shares, which is around 1.3%.
Just kind of wrapping things up here, we do believe PayPal has a large growth potential. They're continuously expanding into new markets and releasing new services, whether that be through acquisition or their own development. Their merchant accounts are going to be important going forward, as more businesses that get on board here will grow, and it's kind of a word of mouth thing as well. So as long as it can grow that way, that's perfect. And then the future plans and partnerships, like with Venmo and Amazon, that's important too, that they continue to make these moves in order to be more successful going forward. So one last time, we're going to recommend a buy of 30 shares funded by the sale of 65 shares of Emerson Electric. Our target price is going to be $206.80 with a target return of 11.87%.
I'm going to ask the first question just so I can go over about. So can you go all the way back to the slide where you want to find the earnings? By the way, I really like this stuff that you are having.
Yeah, which one?
The one where you show 19.8%. You gotta go back. There we go. This one. So I think one of the key things, basically to justify this kind of company, you really have to come up with the conclusion that they could grow their earnings a lot higher, because 60 PE, that's what the market's saying is going to grow the earnings. So what I would, and I even made this on my comments, so you know which ones are my comments. Now, if you could get to $12 in earnings, I'd be more convinced that this is good. Now, that profit margin from 13% to 20% in 5 years, according to value, and something like that. What do you think could make that go to like 30%?
The profit margin growing?
And why, guys, back up and think about it. Why did it go from 13 to 20? What happened in the business that you think that? There's something about this business you learn in managerial accounting too. That could explain why this margin went up so much.
Yeah, so the first one that I can think of, just in profit margin generally for PayPal in itself, is that they got rid of eBay. And that was a big reason why they were able to maintain better profits in general.
That happened some time ago, right?
Yeah, it was about
2015.
Yeah, quite early part.
2015-ish.
Okay, but
so-
it did rise after that. But
Yeah,
it's
so
been
that's-
rising each year, by the way. It's
Yeah.
consistently rising each year.
So yeah, the first one that comes to my mind is obviously getting rid of eBay.
That doubled the margins.
That was losing money for them, so that helped out. And secondly, would just be that the e-commerce community in general just keeps growing. They don't have to market so much towards it.
Getting there.
Getting
So it grows without having to spend.
Yeah,
money on
so
costs.
obviously fixed costs will remain the same, but the variable costs towards marketing and all that.
Very good. I think that margin assumption, if your sales assumption comes true, is very low.
Okay.
All right,
Okay.
and that's what the market's basically saying. They're going to become way more profitable. It's like a MasterCard or whatever.
Yeah.
Every dollar of sales, it's not 100. Every dollar of sales doesn't drop to the bottom line because you got to pay a little taxes on it. But basically, every extra dollar of sales is profit.
Exactly.
Right.
Yeah.
I
Okay.
also think that like e-commerce in itself is growing, and especially like our generation and looking at the demographics you pointed out, we're using Venmo, we're using PayPal every day, and a lot of us aren't like, we don't want to wait. So like we're going to instantly transfer to our account, which is just a percentage going right to Venmo, right to PayPal. And this use of like cryptocurrency and now this deal with Amazon, they're going to use PayPal and you're going to use MasterCard and Visa. It's just this ease of
Is
use.
the deal with Amazon the one
That's coming in 2022.
okay? What? And that's to be able to do it on Amazon?
Yeah, so what
I
it
didn't
is.
know you couldn't buy with PayPal.
No, so
on
right
Amazon.
now, you're gonna be able to use PayPal as checkout in Amazon. But then
PayPal or
when it-
Venmo?
PayPal.
You can use PayPal.
PayPal right now, but you'll be able to use Venmo, which will allow you to use cryptocurrency in the future. I think another thing to point out is like, yes, this is a competitor, but like Apple Pay, like I know a lot of students here, I know you use it all the time. But like have your phone and like we go to the vending machines downstairs and he puts his phone up.
That's why I use
Like
it.
we
Yep.
don't have to carry cash, we don't have to carry a card, and we all have our phones nonstop. So like this ease of use, we don't care if we give them 50
They've already
cents.
developed the technology, so.
Yeah, it's already on the
sales-
phone.
Yeah.
Right. So
And like
one-
this fast-paced checking it, like stuff.
So one more, by the way, we had an opportunity to buy this 100% ago, just so people know.
Never
So
saw
what
a
else?
mistake.
I want to say one more just comment. I hate that business where you can actually buy it and pay in installments. There's a quote, I just actually had it in my slides. I don't remember who it is, but it was some advisor on economics, the president, and it was said like 40 years ago. Credit is the wonderful gimmick that allows you to start at the bottom and dig yourself in a hole. I'll leave you with that.
That's a very
Right.
true statement.
Thank you.
Yeah, thank you very much.
Thank you.
Thanks, George.
Very interesting.
On that, when you're talking about the installment payments, who wears that credit risk? Is it the retailer or is it
No,
PayPal?
It is PayPal, so they in turn become the creditor, so they have all the risk. That's why these merchants are moving towards that, because instead of them waiting for their money, PayPal will just pay them right away and then get that credit.
PayPal pays the merchant
Yep,
minus, and I'm assuming that's where the
A
money
fee,
comes from.
yep,
So
yep.
they're taking it, is that fee comparable to what MasterCard and Visa are taking?
so yes, basically, it definitely does depend on the transaction type. It didn't give us a good explanation on that, but anywhere from 3 to 8% on top, so.
Yeah, the service is in its infancy. It's pretty much brand new. I think as of early this year, as late last year.
Merchant services isn't,
Well, right.
MasterCard, Visa have been around forever now,
Yeah.
they've been taking that.
The buy
slice
now,
of the
yeah,
pie.
but if you're talking about the installment payment service, like the buy now. pay
So,
later,
so
yeah.
from what I tell, it is a little more actually, because typically, Visa and MasterCard is about anywhere from 2.5 to like 3.25%, while PayPal and this buy now, pay later can charge all the way to 8%, depending on the merchant.
What do they charge on their normal transaction? If I just go out and buy it
Yeah,
on
so,
Amazon,
it, like I said, it depends, but typically on average, it's about 2.5%, 2.49%.
Kevin voted against it last time. Actually, I don't know. He might- But he's gone, so I'm gonna blame him. I like this one last time.
Oh,
go ahead.
so is PayPal buy now, pay later, is that stemming from this recent acquisition of Patty? Is that why they're extensively getting into this now? Because it seems like that's a big thing in Japan, which
Yes.
obviously we're not, too privy on how things work in Japan with e-commerce and
Yeah.
consumer spending, but has that kind of, pushed PayPal into this buy now, pay later? Is that
I
acquisition?
believe so. So I think they implemented the pay for first and then after acquired Patty and for the Japanese e-commerce section. But I think that's just because so many firms, like Affirm and Square, are starting to offer these. I think they did it sort of to compete with competition. And
There's also independent, like Klarna, if you're familiar with Klarna, they are solely buy now, pay later, and they do partnership with the website. So, or Macy's, for example, they have an exclusive deal with Macy's. So Macy's pays Klarna for their services. Klarna takes a fee from Macy's after Macy's receives the money for the transaction, and then it's up to the person paying for it to make those payments. And so obviously, I think this whole buy now, pay later industry is kind of on the rise, and I think that's a big, like you said, it's a big reason why we're hopping into it now. So.
So the eBay thing, because that was, the last time this was pitched, it was right around the time they were going their separate ways. So PayPal was a subsidiary of eBay.
Yeah.
Spun off as an independent entity, but as part of it, maintained some sort of an exclusive arrangement with eBay to be the preferred, yes, thank you. They split ways. It was a risk at the time. You're saying that was good.
Yes, very good.
Tell me about that again.
So just in the earnings call that we've listened to in PayPal in general, they also talk about eBay. Ever since they left, eBay was losing money every year for PayPal just because it's just so big and they have to market it and all this. So rather on just dealing with eBay, they made that deal and they were able to cut those fixed costs and variable costs down tremendously, resulting in that higher profit.
So now when they go in, they have an arrangement with Amazon and you're able to use,
Correct.
let's call it crypto assets.
Mhm.
Don't put that in my space. They're not currencies. So now you're able to use crypto assets so you've got your funny money account and then you take it out of there, you pay on Amazon up through Venmo.
Mhm.
But from Venmo to Amazon, it's a US dollar transaction.
Mhm.
They have a fee. I'm assuming it's not 3 1/4, it's gonna be some
Yeah.
2% or whatever. What's the,
Yeah, so if you do pay in cryptocurrency, it's not like a dollar amount that they're getting. They still maintain that crypto, so they get a percentage of that crypto rather, and it's a very small percentage. I do believe it was like 2%.
Yeah.
Is that fee?
and so then PayPal is, so now PayPal has a balance
Yeah,
of Dogecoin?
yeah,
or
yeah,
some
yep.
other
So
currency?
obviously they won't allow at like the big ones right now, Bitcoin, obviously, but.
Yeah.
So it's only approved coins that you're allowed to use. You can't just buy any cryptocurrency and go to
Sam's
Amazon
coins?
and buy. It's gotta be approved coins.
Be quiet. You got a question back there.
Yeah, no, I think I'm done.
Yeah, thank you.
All right.
The question is still related to the so-called merchant fees, right? You have the credit card.
Yeah.
Always PayPal. So the credit card charge a merchant fee is around 2 to 3%. PayPal charge it, how does that make it PayPal competitive?
I didn't hear the end.
Yeah, could you repeat that one more time?
Yeah, the credit card charge a merchant fees, right? But if I use PayPal, PayPal charge again. Because I bought my credit card with PayPal, right?
Uh-huh.
So the merchant need to pay, not only pay the credit card fee, merchant fee, but also pay the PayPal. So why is this makes everything more expensive?
I believe that if you are using like a wallet through PayPal and you have a credit card on there, those are the fees that will be implemented if you use that card. But I believe, and I correct me if I'm wrong, I believe that PayPal has like a wallet balance of digital money per se, of people are transferring it to you and you get paid in there. And I think when it's taken out of that account balance on your PayPal account rather than the credit card itself, that's where you're going to see the difference in those rates.
And if you were to get a PayPal or a credit card through PayPal, they are strictly MasterCard. They have a strategic partnership with MasterCard. So, like I said, correct me if I'm wrong, but I think those credit card fees are waived and you only pay the PayPal fee. So instead of having the double fee, I think you're only fee once, or it's a lower one-time fee. Both being included in there.
We have some great agreement, right?
Yeah, yeah.
Yeah, this is, yeah.
One quick one. Can you guys go to your, the correlation? Right, so what I'm gonna ask, I'm gonna dig deeper into why you guys chose right there. So you wanna buy PayPal. And what's their main business? Would you categorize it as?
Financial services.
Yeah.
Okay,
FinTech, financial services.
payments,
Yeah.
okay. What's the second stock that's on there?
MasterCard,
What do they do?
credit services,
Okay, and you mentioned something about Apple. What do they do?
same thing. They have the Apple Pay, yeah.
So if you have all these people that do the same thing, and you wanna pile on more, so we're gonna make a nice bet
Very true.
in
Yeah.
that, so, explain. I basically just said, yeah.
I feel like it would be a good investment because I don't think that this service is going to be going away for a while, and I feel that it's going to be part of the future, and I think it's inevitable that we'll see growth. I don't think that we'll see any decline in growth or negative feedback of the electronic wallets that are offered through all these services.
So the strong pitch to the board is go all in on fintech.
Well, we had a debate too.
That's the persuasion that you guys would have to put forth, right? Because, you came up with Emerson, which is fine. I'm not complaining, I'm not, criticizing that, but when you start looking at the board, we'll call it, in the same business lines, and then also, by the way, their correlations are above Emerson's. I'm just curious, again, maybe questioning your your thought process on that.
We originally actually, were going to sell MasterCard.
Yep.
But that was before we found out about the strategic alliance. And, we thought that having them both in it would be beneficial.
Went all in, baby. All
Yeah.
your chips. All right. Now something.
You're betting on it.
All right. Proceed. So, like,
Okay, we're out of time then, Joe?